Going over the trades intra-day today, I said yesterday in our daily report we wanted to sit out during CPI, and the data told us that CPI has been terrible the last 14. I didn't look back beyond 14. I could quickly look back at 14, but beyond the last 14 CPI reports, the data shows that it's not a good idea to trade on CPI. And so one of the things that I did today was, as I said yesterday in the video, was to wait. I may phase in intraday on a 10K drawdown. It was minus 99.55 down here. 99.50 I think was the low point, and it's come back down here, teased the 10,000. I went ahead and got in. When it got to this point, it was short one ES and short one NASDAQ, and I phased in. I entered into those open position trades because even though those particular positions are actually already profitable, we look at the equity curve of the portfolio combined. And so we went on ahead. I'm not saying this is the turning point for the portfolio, but we've gone through a large 10 out of 12 days in a row. It's a high winning percentage, much higher than what we've seen historically. And so these things go cyclical, and avoiding a 10K loss, which is, we got in at about minus 9.2K was the drawdown level that was entered in here, working on doing that at the 10K level, but we were able to get in at the 9K level because earlier it bounced off of that level. It's been sitting at that level. So went on ahead and phased in at a $9,000 drawdown. Early it was up 9,000. It was long 8 NASDAQ contracts, long 3 S&P contracts, and it was acting early on as if it was one of those the days we haven't seen in a while. We were used to seeing longer term. We used to seeing gap up trades doing well. In the shorter term of the past, 2023, the last few months, we're seeing gap ups and then getting slammed. And so this lasted longer, and then it got slammed. And so interesting price action today. I'm not saying that this is the turning point in the portfolio, but it's a good place. It's a good time to miss CPI. Good time to phase in. In 2023, the average CPI is minus 4.7K, and so we got in at about twice that. So minus 9.2K is about twice this. Worst case of this would be minus 9.4, and so we got in at a 10K drawdown level, and it helped us avoid a about a 10K drawdown in the portfolio. It was nearly a $20,000 drawdown intraday, about $19,000 from the equity peak to the low point, but it's about 9K from previous day's close. We measure risk based on the previous day's close. We don't measure risk based on what it would have made intraday and then rolling over. But if you did, it's about a 19K turnaround. And so we are in now, and so we could go through further drawdowns. We'll see. I'll have the end-of-day report posted as well. But this is the midday CPI data. CPI came in as expected, and but it looked like the market would be different than other CPI days, more calm. But it's finally rolled over and give us the opportunity to avoid some volatility that we've seen on CPI days. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.